A negatively amortizing loan is one where the payments are not even enough to cover the interest-only portion of the loan. These were very popular over the last several years. They had what are referred to as teaser rates, maybe starting at 1%, 1.5%, but that was only the payment rate. It was not the real rate of your borrowing. So if you were paying the minimum payment, which say was based on 1.5%, but let's say the real rate should have been 7%. The difference between what you pay and what you owe is added to your balance. So on a monthly basis, you would see your balance actually increase as opposed to decrease. The real rate can change on a monthly basis. It could be 7.25, 7.125, 6.5. You can have some changes in the market on a monthly basis, and therefore the amount that you are paying towards that loan will leave a larger portion of negative that you actually owe, depending on what's happening with interest rates. You would use a negatively amortizing loan when you're trying to buy as much house for the money as you possibly can. They're great loans for people who are self-employed. They're great loans for people who are buying rental property because they really offer cash flow, which is important to the landlord as well as to oftentimes a self-employed person. As long as you realize what you're getting yourself into, it's a very good tool. So as long as it's properly explained to you as the consumer, it's a very good loan program. But if you don't have the facts, meaning that you don't know how the loan's going to adjust or how it's going to work, then it's working against you. I've had so many people tell me over the years that they got this 1% loan and they were told maybe it would go up. I'll guarantee you it's going to go up. And see, they were never really explained that. And therefore they found themselves in an upside down position where they didn't want to be, owing more than they started with. So let's say if you borrowed $100,000, at the end of 12 months, you might have owed $12,000 more than what you started with. And over the course of year after year after year, you're building up a negative situation. So as opposed to appreciation in your property, you have a negative situation in your property.